here in Tokyo, we are all very happy to see that this is really for the first time in more than a decade, a risk-off move in global markets, and the yen doesn't strengthen, which is great news. Why is that? One of the answers is that you've got a lot of Japan activity buying global assets. You may have seen that the insurance companies, the pension companies here in Japan have made a record push buying global assets, and that's of course great news and putting a bit on the dollar.
Do you think that there is the possibility that if we do see continued global market volatility, that Japan could ride it out alone, i.e. to what extent is it decoupled, or because of its very export-oriented economy still, it's going to get that contagion?
Look, I mean, there's no question that, the Japanese equity market is linked at the hip to global fortunes. And you find that basically around 63% of all corporate profits for listed companies come from either exporting or offshore production. So yes, the global economy fortunes are something that the Japanese market is very sensitive to. But the good news is, if there is a sell-off in global markets because of rising bond yields, and bond yields are rising because of better than expected global growth, then for Japan, that's actually a win-win situation, because it means that Toyota, Sony, Nintendo, they're all going to be facing good upward revisions to their earnings because of stronger growth.
Interesting. You talked about the momentum in the markets, yes, but what about the BOJ support, periodic support to the markets? Do you think that there would come a time, given the market frenzy, given the rally that we're seeing, 30-year highs for the Tokyo markets, that the BOJ may step back on its ETF buying?
Yeah, and that's, really the key focus on the Bank of Japan, sort of annual outlook and annual policy review, which is going on right now. As we all know, the Bank of Japan has been buying, around 1.5% to 2% of the market's capitalization per annum with its ETF buying program. And now that the Bank of Japan owns more than 10% of the equity market, that's something that policymakers need to actually review. Is this going to happen fast? Is it really going to be a disaster if the BOJ stops buying? I think Japanese policymakers are way more professional and pragmatic, and that the Bank of Japan ETF buying program, is going to continue for the time being.